Good afternoon. Thanks for tuning in. You're watching Countdown on Bloomberg Quint Live, India's first digital live streaming business news service. These are the top headlines that we're tracking at this hour. Indian markets post a recovery in the second half of the day, led by pharma and select NBFC counters. The rupee hits a 5-month low in trade today as India's trade deficit nearly doubled in the last financial year. Infosys is one of the top Nifty losers today after the company gives a lower margin guidance for FY19. UCO Bank is down nearly 8% after the CBI registers a case against the former CMD. Supreme Court stays Reliance Communications asset sale, agrees to hear a plea filed by an arm of HSBC.
Well, those are the top newsmakers. Thanks for tuning in to Countdown. My name is Neeraj Shah. And looking at the markets, it's not a bad afternoon. It's been a fairly quiet trading session, to be honest. But we're trading close to or at the high point of the day. And we've digested the disappointment that came in from the Nifty IT at the beginning of the day, led predominantly by Infosys, but including Infosys, a bunch of other stocks are trading at highs. This is the Nifty IT, which is, of course, also come off from the lows of the day. Stocks like Tech Mahindra, TCS, well and truly in the green. And the mid-cap and the small-cap indices will come up on your screen before we get the heat map. Just bring up the Nifty mid-cap and the small-cap indices. They too seem to be doing okay, so the market breadth should be positive. Firstly, the heat map. And a heat map will show you that the green has clawed its way back meaningfully. When we started off, there were only 5 stocks in the green. Now, a healthy spattering, 3 rows of green, hardly any red. And save for Infosys and Tata Motors, which are the top 2 losers, we don't have too many major losers that are there in the session today. So what's trending today? Let's try and tell you that. I think pharma is trending. They may not be making those big bang moves, save for Cipla, but all 3 large cap pharma names are trading very, very well. 4.5% for Cipla, about 1.5% for Lupin. Sun Pharma too has not done too badly for itself, but Cipla is essentially the cornerstone of this move. So those stocks seem to be doing okay for themselves. That aside, there is some strength that has come in onto the earnings impacted stocks as well, predominantly Govt Finance. So Govt Finance is doing really, really well for itself, about 4.5% or almost 5% higher. ICICI Securities, okay, it started off much better than what it is doing right now, and we're certainly seeing some earnings impact coming in on Rane break as well, down about 10% in trade. Last but not the least, the stocks which are trading at new highs include a KEI, include an Indiabulls Ventures, and include a Muthoot Capital, in addition to, of course, a bunch of others. But these 3 I thought stood out for me. Indiabulls Ventures in particular, up a healthy 20%, going extremely strong for itself. But this is not the be-all and end-all. The large liquid universe, a clutch of stocks to monitor and clutch of points to chat about as well. Navneet, what are you spotting here in the F&O space?
Well, Neeraj, it's been a great recovery. What we saw in the morning, I think the picture is just reversed right now. In fact, the recovery for both Nifty as well as Bank Nifty has been pretty good, and it's led by a couple of heavyweights. Let me tell you, stocks like TCS and HCL Technologies, which were trading in the red in the morning, have recovered, and now they're trading in the positive territory. TCS currently trading with gains of 1%. Let's just pull up the futures, the Nifty futures as well as the Bank Nifty futures, which have seen good amount of build up in today's trading session. For Nifty futures, the premium is still the same what it was on Friday, so it's just about between 9 to 10 points. Open interest, no major build up seen as of now, but open interest build up has been seen for Bank Nifty futures. That's the one which is in focus. Let's just pull up that. Bank Nifty futures, last when I checked, the open interest was up nearly 10 to 12% right now, but they continue to trade at a discount of about 1 to 2 rupees. In terms of option strike today, the call strikes, if you look at them, the 10,500 call strike has seen some bit of OI addition, but also there has been some intraday unwinding that we've seen. So far, it's 1.3 lakh shares. I remember in the morning session, it was somewhere between 2 lakh shares. So as the markets have recovered and they're trading in the positive territory, probably there's some unwinding of position which has taken place. Whereas out of the money call strikes for the likes of 10,700 have been active since last week. On the put side, interestingly, watch out for the 10,500 strike. In the morning, there was unwinding there, but now it's added nearly 9 lakh shares. So this is the strike where maximum OI addition has been seen so far, and also put writing continues for strikes like 10,300 as well as the 10,400, and we've also surpassed the level of 10,500. Remember, on the call side, maximum open interest was around that level. We'll check with our technical experts what's the next level to watch out after this. In terms of stock futures, DCB Bank is doing pretty well. It's gone up on back of earnings, but we've seen good amount of OI build-up, which is coming on the future side. Let's just pull up the futures of DCB Bank. The open interest is up nearly 38%. That's telling you that the traders are taking some fresh position here. The other one is Escorts, which continues to trade around the lifetime high levels. On Friday, it was up 4 to 4.5%. Today also, it's inched higher. Escorts is trading with gains of 1%, and the futures do indicate that the fresh long positions for this counter continue even around these levels, Neeraj.
Well, certainly a set of stocks which are doing well. By the way, I must mark, when I'm looking at stocks at 52-week highs, there is Sudarshan Chemicals out there, 3.5% higher. There is SRF out there, about 1.5% to 2% higher. And Aarti Industries is up about 2.5% at 1267. Specialty chemicals certainly seems to be a space that is continuing its momentum and notching fresh highs for itself. However, I don't know if those are the set of stocks that ICICI Prudential Mutual Fund bought or no, because they certainly favored aluminum players like Hindalco and Nalco, increasing the stake in each of the stocks in the last month. However, the mutual fund house reduced its stake in players like IOC, HCL Technologies, and a few others. So what have been the key changes in the mutual fund house's March portfolio? Jayesh Khilnani Johnson with the details. Jayesh, good afternoon.
Good afternoon, Neeraj. So first of all, their total equity assets now stand at about nearly 1.2 lakh crores, which is spread across more than 400 securities. In terms of the sector, if you look at financials, still stands, the top gainer over there with 25% exposure to financials, followed by utilities, which is just over 10%. But in terms of where they have, increased and decreased stake, let's have a look at that. So Hindalco is, the top one over there, 4.6 crore shares added, and definitely the recent rally that has contributed to the gains of ICICI Prudential Mutual Fund. Wipro, they've added about 2.4 crore shares, SBI 1.7 crore shares, and Nalco and Dabur just about 85 lakhs to 1 crore shares added for both of them. In terms of where they have decreased stake, have a look at that as well. Ashok Leyland, they've cut down 1.1 crore shares. IOC 92 lakh shares cut from their portfolio, while we have L&T and HCL Technologies that also they have reduced stake over there, followed by Ashoka Buildcon 38 lakh shares they have reduced their exposure to. In terms of where they have bought afresh and sold off completely, if we can have a look at that one as well. So this is more to do with the new buys in the month of March. They subscribed to Bandhan Bank and got 11 lakh shares over there. AB Capital 1.5 lakh shares they've bought in, and they have added Sudarshan Chemical and GIC also fresh to their portfolio. In terms of what they have sold off, for not many counters, just 3 of them that we could pick up. Texmaco Infra 20 lakh shares that they held, they have sold off that, followed by Balkrishna Industries, and Repco Home Finance also goes out of the portfolio of ICICI Prudential Mutual Fund.
Wow, some interesting names out there, but and Sudarshan Chemical features, I'm not surprised really, but that stock has been driving up. But it's some interesting set of names that have been bought and sold by ICICI Prudential Mutual Fund portfolio. Arguably the largest house. What they do does matter. Okay, let's talk about what are other fund managers and asset managers doing as well. Anshul Mishra is fund manager for equity at Union Asset Management Company, joins us right now on the show with his thoughts. Anshul, good afternoon. Thanks so much for speaking to us at Bloomberg Quint. What have you been doing in the month of March? I reckon that while March may have seen an odd aberration or two with regards to equity flows, things have returned to normalcy in April. What has been your pattern in the last 4 or 5 odd weeks? Have you been continuously deploying money?
Yes, so we haven't seen much of an impact in terms of inflows over last 3-4 weeks, and money continues to flow. I think the entire drive of financialization of savings and formalization is something that's still continuing. There could be a couple of months of hiccups here and there, but we are continuously seeing a good traction in the market.
Anshul, which are the sectors, or rather which are the themes according to you which would work in FY19?
So our sense is this entire formalization of savings, that the drive that started probably 1.5 years back, is something that would continue to drive earnings, continue to drive markets forward. Other than that, we also feel there could be pockets of opportunities, say for example within commercial vehicle space or within the consumption theme. So these 3 or 4 could be drivers of earnings as well as markets moving ahead. Although over a 1-year period, it would be difficult to hazard a guess. But our sense is in terms of earnings over next 2 to 3 years, these would be certain spaces. Private consumption, consumption in general, commercial vehicles, private banks. These would be the spaces which would drive earnings forward.
And what have you made of the macro picture? Though we've seen the bond yields cooling off in the recent past, the highs that we've seen in the month of February, but now the crude oil prices have started to inch higher.
So on the macro front, we feel that in the time to, especially as we head in in an election year, and that to a big election year, we feel that probably in the second half of the year we have some inflationary headwinds. Having said that, so that's the macro picture we are looking at in terms of crude oil prices. I mean, we feel that this is the range where it can settle. But broadly from a market point of view, we feel that what we are seeing right now is a bout of volatility after very good performance over last 1.5 years. And this year we will see earnings catching up to where markets are right now, and hence this year will be marked by volatility. And then from there onwards, a new leg of upward move in markets could start. So probably this year will be marked by volatility, which could be because of inflation, as you rightly mentioned, and earnings catching up.
Interesting. So, where is it that you believe the highest pickup in earnings could come about? I mean, this answer varies from house to house, to be honest. A clutch of names have cited some completely different sectors from what some others have done. Where do you believe the earnings recovery will show? Irrespective of what the valuations is, this is not a conversation about whether you find merit in owning those stocks or not. But where do you guys, based on your calculations, believe earnings growth will see the biggest momentum come back in FY19?
See, 1 year would be a difficult, assessment to make, because we as a fund house look at a long-term earnings expectation, as well as how we are seeing traction over next 3 to 5 years. So, with that in mind, as I mentioned, private sector banks is a space that interests us. Within consumption also select themes. And as I mentioned, commercial vehicle is a space, and that includes all, entire gamut of companies, right from financing to the front end companies to even auto ancillaries. So across the board, in these pockets in markets is where we feel the earnings momentum will be relatively higher. And that is where we feel, market will also recognize, if not in next 1 year, probably 1.5 year, 2 years down the line.
You liking only commercial vehicles, or does that cheer in auto spread over to, say, for example, the tractor companies or the two-wheeler companies? I mean, or maybe passenger vehicles as well.
So that could be a 1 year phenomena. The spaces that you mentioned. See, passenger vehicles is a secular story in India. And within that, there are companies and there are businesses that are doing very well in terms of market share, in terms of reaching the customer service and all that. But what I am trying to talk about is a space where we are seeing acceleration. So when I say acceleration, you would see increasingly higher earnings growth rate in times to come because of operating leverage benefits coming in, even if the sales growth were to taper down. So those are the spaces, and commercial vehicle also has feeding companies into it, whether it is through finance or through ancillaries. So those spaces will also see operating leverage benefits. So that's why I singled that out. But yes, you are absolutely right. Passenger vehicle remains an attractive opportunity and has been for some time. Two-wheelers, according to us, is a space that needs to be watched, or one needs to watch. It is purely from a valuation point of view is at a right place, but at a point of time with the kind of competition that particular industry has, one needs to watch out as to which spaces or which companies one needs to be. So that's what I have on two-wheelers.
Anshul, talking about the earnings season and specifically for Q4, we had Infosys which came out with the numbers on Friday, and there's been a huge recovery in the IT pack. In the morning, we'd seen some selling pressure coming about after the street was disappointed with the EBIT margin guidance they had given for FY19. I'm not asking you to comment stock specific, but overall, what's the view on the IT pack, a sector so far on YTD basis which has been outperforming the markets?
So IT as a space, we have been underweight for some time as a fund house, and so within that space, our rationale is there are pockets of opportunities in the market where earnings growth that we are seeing over the next 3 to 5 years is much higher. IT space we are watching because of being underweight. We are watching out for. We need to see how this entire transition from the traditional model of delivering IT services to digital model. This transition happens and which companies are leaders in this transition. So this is something that we are watching out for. Wherever we feel confidence that the transition is happening in a way which is value accretive to the shareholders is where we will have a hard look at those companies. But right now we are staying away, predominantly away from that sectors with marginal exposures.
Are you finding value in pharma then, Anshul? Because that's a sector, I mean, if you foresee earnings coming back, then pharma probably has the best value right now.
Yeah, but see, value must be value must not be value trap. So that is what we believe in, and to that extent, we are watchful on pharma, I must say. But again, we don't have any exposure in pharma. We are seeing how business are panning out, how the entire transformation is happening, because each and every company has faced challenge for last 2 years. They are transforming, they are going back to US FDA, getting things sorted out. As investors, we are watching this space, but we are not committing money as of now, and at appropriate time we will look at companies which we feel give us confidence in terms of how they can take things forward. So that is our stance as of now on pharma.
Okay. Well, one final question from my end, Anshul, really, and that is pockets which have started off really well on an expensive note, but are finding favor because of foreign capital coming in. Insurance is a case in point. While we have 1 out of the 3 listed companies which is somehow not been able to move, the other 2 are doing reasonably well on the bourses, are probably nudging the lines of being expensive on the valuation front. It's a sector that almost everybody seems to be wanting to own. What are your thoughts here?
So yes, insurance is an interesting sector. It's a long-term sector, long-term in the sense that we like. It has the potential of creating value for investors over a longer period of time. We are also watching that particular space. There are interesting ideas, and we are waiting for the right valuations to get in, because as a sector, I'm sure everyone knows that the sector per se is evolving. And we want to take a slightly longer term view and not really short term cash flows and short term earnings profile. We want to take a long term view, keeping in mind what can be the regulatory measures that can happen in future. And based on that, when these companies are available at a reasonable price, is when we plan to look at them. But right now, yes, I mean, it's an interesting space worth evaluating.
Anshul, if I'm not wrong, you did mention that you like the private banking space. What about the PSU banking space? Considering the sort of correction that has taken place, do you find any value there?
I think in that space, one needs to be very specific in terms of what one is looking at. Our sense is we are okay with pricing risk. We are not okay with pricing, or we can't price issues that have happened of late. So we are very uncomfortable where such issues happen. But wherever there is risk in terms of book or cyclicality, we actively look at pricing them, and at the right price we even look at entering them. So I think as investors we are looking at specific banks only, not the entire space, where we have confidence that issues like the one that happened doesn't happen, but the risk is properly priced in. So that's the way we are looking at it.
Interesting. If I can just extend the argument a bit, Anshul, what are you doing with consumption? And the reason I'm asking this to you is because the view of somebody who's running, retail money, having that pressure of being able to show some performance year after year could be different from somebody who runs a portfolio management scheme. Now, when we speak to portfolio managers, they are happy owning, say, for example, in HUL, even if it's trading at 50, 55 times, and if it doesn't perform for the next 1 year because they believe in the 3-year period or a 4-year period or a 5-year period, and because their investors are a lot more patient with them, that they are happy to own such stocks because even if it doesn't perform in the current year, it will perform in the year ahead with volume growth, etc. coming in. Where are you on this whole argument with regards to consumption names? Expensive names, but likelihood of growth coming back, if not in FY19, then in FY20 seems to be very, very high.
Yeah, so the good thing about looking at long term is that you can continue to look at intrinsic value irrespective of where the stock price is. So the way we look at any company, any business is that what kind of a value is the business generating for its investors over a longer period of time. When I say long period, we look at 10-year, 20-year kind of, or even more than that, those kind of cash flows, how the business is shaping, what is the expectation. And then we try to arrive at an intrinsic value. And then compared to that, we look at where the stock price is right now and what kind of a return potential it has. So typically 1 year forward, 2 year forward multiples don't really have a bearing on us in terms of whether the stock should be there in the portfolio or not. The stock or the company ends up being part of the portfolio because we believe it has the potential to create a long-term intrinsic value. Its intrinsic value is growing at a faster rate, much faster than the market. And the price is at a reasonable level for us to own and generate that kind of value for our unit holders. So that is the kind of framework that we work in. And so that is why a 50, 55 times 1 year forward or 2 year forward multiple doesn't really bother us to that extent.
Okay. Anshul, just specifically to today's trading session, we've seen some pickup coming in for the realty pack. Again, not asking you to comment on any individual stocks, but off late, a lot of these, in the construction space, road builders have been awarded contracts by NHAI. Are you bullish on this space, considering there are a lot of market participants which have now started accumulating stocks in this sector?
So roads, if you are asking specifically, yes, we are very optimistic on that particular space, and within that space also it has to be very company specific, as this is a space which is continuously seeing evolution in terms of business models. What was relevant probably about 5 years back is not relevant anymore in terms of there are new models coming up. So how each of these companies take it and execute is something that we are watchful, and within that space, wherever we have confidence in the management and their execution capabilities is where we are willing to put our money. So that's the way I would answer that.
Just ask one more question.
Anshul, last year 2017 was all about the gains that one saw for both the broader markets as well as the benchmark indices. We did see substantial gains coming about. Again, once a lot of these market participants now believe 2018 could be a year of consolidation. You also said reasons being there are a lot of state election, and then we are heading into general election in 2019. A lot of the factors globally now have started to impact Indian markets right now. If something has to do well, do you think it'll be from the broader market arena or from the large cap space?
So, according to us, one of the biggest drivers for this volatility is the earnings catch up to valuations. Yes, there are a lot of global factors. There is election year that we are heading into. But according to us, that is more of an enabler for something that was anyways bound to happen, which is you had earnings not being there and the markets running up. So it needed to catch up, and that is why probably these enablers are there. Hence, what we feel is this year will be a year of opportunity for investors who want to identify good businesses and who want to invest in good businesses, because you can get it reasonable valuations from a longer term point of view. And as regards the market cap thing, we feel we are in that sense market cap agnostic. We feel that if there is a good business that can give decent return to shareholders over a longer period of time, we are interested in that business irrespective of the market cap where it is. So, so that is what we feel would be the drivers moving ahead.
Before I let you go, Anshul, what did you make of that trade war news that has been, dominating the global markets now? We've seen a lot of volatility in the metal space as well. What's your view on the domestic metal companies, and how, according to you, can it impact if there is any sort of trade war that takes place between US and China?
So, I mean, it's a concern. The trade war is a concern because it changes the long-term dynamics for a lot of the companies that are either use this particular space as an input, or it's their product. We are watching, but as of now, we don't feel there is any need to change the long-term intrinsic value for companies until this thing crystallizes. So as of now, we feel it's more of noise, a noise that needs to be watched out for in terms of hard data. But once we feel that some kind of a change in color is happening in terms of the global dynamics in the metals space, we would accordingly review our exposure that has exposure to this particular space and then make changes. But right now, we are not overly concerned from the trade war noise.
Okay, Anshul, we'll leave it at that. Many thanks for joining in today and giving us your perspective. Appreciate you being with us today. That's the view from Anshul Mishra on a variety of topics. By the way, as we speak, the Nifty Bank is up about 106 points. The Nifty 50, 31 odd points. So it's about a 0.25% rise that's seeing on the key benchmark indices. And the Nifty Bank leading the way, really, leading the charge, to be honest, 104 odd points higher in the session today. Bring up the list of index gainers before we get in our technical experts on board. And while supply is at the forefront, yes, but look at what's happening as a result of HDFC and Kotak Bank revving up in trade. HDFC 1.5% higher, 1.6. Kotak Bank 1.6% higher, so 1870 for HDFC, 1170 for Kotak Bank. So that is doing really well. And HDFC Bank about 1.25% higher. When you have heavyweights like these moving up, you would essentially have the Nifty Bank doing well. Let's get the intradays of these three stocks, HDFC, HDFC Bank, as well as Kotak Bank. And you will see the kind of traction that they have shown, and thereby the kind of moves that are happening on the Nifty Bank. So really good going, and masking the disappointment that would have come in as a result of Infosys, or for that matter, Tata Motors, which is really cracked poorly. Today, 4.5 or 5% lower for Tata Motors, 339 or 340 and counting for the big boy from the auto space. So this one refuses to find any momentum. 14 million shares traded for Tata Motors today. It's not looking like a happy hunting ground. The mid-cap end of the market is, let me just mark one or two stocks before I get in Hemen Kapadia in with his thoughts on the charts for some of these names. But the mid-cap end of the market, UCO Bank trading about 8% lower. Chambal Fertilizers, which had a big move the last few days, is down about 5% in the session today. And Crompton Greaves Consumer about 3.5% lower today. So that's the set of names which are amongst the top movers in the session today. But let's get in Hemen Kapadia of KRChoksey Securities. He joins us right now in our studios with his thoughts. Hemen, good afternoon. Many thanks for joining in. A bit earlier than usual, a couple of minutes, but maybe the market mood demands that. A bit of a pullback after starting quite lower. How do you expect the last 1 hour to shape up, and what's the very near-term trend looking like?
A very good afternoon to you, Neeraj. I thought this would have happened. We spoke on Friday. I recommended buying a put. I thought 100, 150 points, it went 90 points. The recovery is sharper and better than expected. I thought this is going to take a couple of days. The underlying, Neeraj, remains more positive than negative. 10,380 support. We came to 10,396 today. One feels that 10,380 doesn't look like breaking, and one would have liked to have bought in the morning, but it was too sharp. It didn't stay there long, and this rise is a bit unexpected. But I'm not sure how to play this in an extreme near term, Neeraj. But maybe a couple of days it could or could not. But either ways, we are going to 10,550, 10,625, and 10,720. The base has risen higher, Neeraj. The open interest in the puts, which was maximum at 10, has gone to 10.3, 10.2 and 10. So 10.3 now will access support. The base has gone higher. Upside 10.5, 10.7 is where the open interest lies. So I think it has shown a lot of resilience. the outlook remains positive, and once again, how to play the short term, I am not very sure. If it falls a bit, I'd sell slightly out of the money puts next month, but I wouldn't short anything at this point in time.
You're looking to go sell the 10,200 put buy for me?
Yes, no, simply because the premium is higher. Okay. I don't want to ride the whole time till it expires, but closer to 10,550, when it crosses 10,550, I would sort of book some profit.
Okay, so as and when the index crosses 10,550, Hemen is suggesting one can look to sell the 10,200 put where the premium is higher, and that's for the May series. Let me also bring in Sumeet Bagadia, Associate Director at Choice Broking, who joins us on the show now. Hi Sumeet, good afternoon and thanks a lot for joining us. How are you playing this rally that we've seen? We're off the opening lows that one has seen. It's been a good recovery in a couple of sectors. How are you looking to play Nifty and Bank Nifty at current levels?
Hi, good afternoon. Well, see, Nifty and Bank Nifty both are looking good to me. What we have seen in Nifty is after a gap down opening, we have seen a one-way recovery. And looking at the chart, it seems that the recovery will continue, and on higher side, there is a possibility that we might see levels of around 10,600 in next couple of days. So for a trading perspective, I think one should be on buy side. Those who have taken long positions at lower levels, they can hold on the existing long positions, with a trailing stop loss to be placed at 10,390-400 levels. From present levels, if there is a dip of around 30 to 40 points, then that should be used as a buying opportunity for the upside target of 10,600 levels. If 10,600 is taken away, then there is a possibility that we might see extended move till 10,700 levels in next couple of days. That means the next 3 to 4 days time horizon. As far as trading bet on Bank Nifty is concerned, I think one can initiate long positions in Bank Nifty too. It's looking strong. From here on, there is a possibility that we might see move till 25,600 levels, and if 25,600 is taken away, then we can see extended move till 25,800 levels. So for a trading perspective, one can initiate long positions at the current market price. If there is a dip of around 100 to 200 points from present levels in Bank Nifty, then that should be used as a buying opportunity for the upside target of 25,600 and 25,800 levels.
So Sumeet is comfortable buying both Nifty as well as Bank Nifty at these levels. Let's also get you some individual stock ideas going. Hemen, which are the stocks that you're recommending in trade today?
I think Bajaj Auto looks positively interesting, Navneet. I think it's deeply oversold. Downside appears limited. It has moved up a bit, but buy in Bajaj Auto. Stop loss of 2760, target of 2880. It's been moving. It's at intraday highs. The other stock which looks interesting is ACC, Navneet. Once again, it has seen some movement today. I wish it was slightly low. I'd wait for a 10-15 rupee dip, but buy in ACC. Stop loss of 1530, target of 1590, but I'd wait for a 15-point dip because simply it's moved up 2% in trade today.
Okay, so two buy calls coming in there from Hemen. Sumeet, what about you when it comes to individual stocks? What are you advocating?
Two stocks, both are on buy side. The first one is Grasim. It's looking strong on charts. From here on, there is a possibility that we might see move till 1150 levels. For a trading perspective, one can initiate long positions in Grasim at the current market price, with a small stop loss to be placed at 1060 on lower side for the upside target of 1150 levels. Second stock for the day is Asian Paints. Asian Paints is giving good move. In last couple of days, we have seen a good recovery in this stock, and today also we have seen a good move. We have seen a good price action which says that Asian Paint is headed higher, and on higher side we can see levels of around 1225. For a trading perspective, one can initiate long positions in the counter at current market price, with a stop loss to be placed at 1155 on lower side for the upside target of 1225 levels.
Okay, so those are the two buy calls coming in from Sumeet, and I just wanted to do a check with Hemen on Nifty ID before I go across to Sanjiv, Bhasin. Hemen, I remember chatting with you about Nifty ID on Friday. There's been a huge recovery from the opening lows. Do you see any trade there?
I think so, but it could take a day and a half now to consolidate just a bit. The opening panic low, I don't think looks like coming. Maybe we could come close to testing it, but lot of resilience, lot of strength. The only sector to remain is in a bull market as far as the sectors are concerned, Navneet. So I think we're at 13,195 in the spot. Anything below 13,100, I think would quantify as a buy in the Nifty IT with a target of around 13,550, Navneet.
Okay, that's a view coming in on Nifty IT. Remember, it's seen a huge recovery from the opening levels. Well, let's get you some fundamental view going. Sanjiv Bhasin, Executive Vice President for Markets at IIFL, is joining us on the show now. Hi, Sanjiv. Good to have you as usual on the show. Good afternoon to you. Let me start off the chat with the IT stocks itself. What did you make of the Infi numbers? Was it a major disappointment at a time when the street was actually expecting Infi to put a lot of its investment towards the digital stream? And that's turning out to be a bit margin dilutive for FY19 and FY20 with the dividend yield of almost 6 to 6.5% for FY19. Do you think it's worth to keep a stock like Infi in your portfolio?
Yeah, so hi Navneet, you've seen that the morning dip or the the ADR weakness of 7% got arrested in just 15 minutes. So it's clearly telling you that Infosys as a stock is very underowned. This stock rallied all the way from 900 to 1180 or 1200, 30% up, and it left out all the naysayers because of the management change and so on. Like you said, maybe the margins guidance on a slightly, they've reduced the margin guidance for a little bit lower because of the advent of digital technology and so on, and hiving off of some of the past because of what Mr. Sikka had acquired as two companies, that Panama, and that has left a little. But I think that this is in line with what you are making out. At 17, 18 times Infosys becomes a reasonable play. I think their guidance towards artificial technology, cloud computing, all will gather steam. So I would use any decline closer to 1050, 1080 if it does come. Otherwise, I still think that 1250 would be a fair target in the next 6 months.
Okay, that's the view coming in on Infosys, and stocks still trading with cuts of nearly 3 to 3.5%, but it's recovered from the opening lows that one had seen today. And alongside, we've seen recovery coming in for a couple of the other stocks as well in the IT pack. Well, talking about the markets, just want to highlight few stocks. Indiabulls Ventures, which I believe Neeraj highlighted at the start of the show, is up 17%, but Indiabulls Real Estate, that's also gone up almost 7 to 8% in the session today. And a couple of the construction and realty stocks from the likes of DB Realty, you've also got something like Jacob. Both of them have seen gains of between 4 to 5% in today's session. Sanjiv, any view on any of these stocks?
Yeah, so see, Navneet, as a whole, we think construction and real estate will be very good conduits to play for the second half of 2018. We are very overweight on some of the construction names. Just to name a few, our top pick is NBCC. We like Sadbhav Engineering. We like Dilip Bincon. We like L&T. All these are top of our list. We also like Shobha Developers, Godrej Property and DLF on any decline, because we think this, the larger players are now emerging to get a bigger share of the market. And you've seen robust sales from Shobha as far as Bangalore and other areas go. Same is the case with Godrej. It's large. It's now one of the largest players pan-India. And I think DLF, after deduction of debt, becomes a good play. So this space is is going to be a very clear outperformer because of the development and construction orders, whether it's road, whether it's ports, whether it's real estate, all that is seeing a lot of traction. I think second half could be, and these become India-centric models. So I think these are very good place to be in, and we think they can be outperformers in the second half of 2018.
Sanjiv, good afternoon. Neeraj here. The big boys in the private banking space are now making their presence felt. The last few days, Kotak Bank has certainly put its hand up and outperform meaningfully. HDFC Bank has started to make those moves as well. And these are large boys making some serious moves the last few days. All along till February or March end, Sanjiv, the conversation was about how there has been a time correction, if not a price correction in these names, and that should be bought into. Maybe people have followed that. But for somebody who's always wanted to buy, missed the chance to buy a Kotak or an HDFC at those levels in the month of March, is the bus gone, or is it still a good option to go out and invest here?
So Neeraj, I'll give you two sides of it. I think at 23,600, the bank Nifty has definitely made a very strong bottom, which may last for some time. Secondly, you know the glass is half full of woes because of the PNB fiasco, the NPA provisioning, and some of the pressure on you know, the expected dilution which most of the PSU banks are seeing. On top of that, you have corporate lenders at Axis and ICICI where there is a change of guard, which in the longer term seems very welcome. So the only place to hide and where the constituent of the bank nifty is, I think, Kotak, HDFC and IndusInd, which you rightly pointed out. I still think that there is too much pessimism. Today the government has given you 90 days to 180 days on the NCLT cases. They will help in the provisioning. They've done away with the one-day thing, and I think some of the power financiers, some of the PSUs and power financiers have got beaten down far more aggressively. So you know, if you can take a little bit of risk, I think State Bank, Bank of Baroda, Indian Bank on declines looks very, very good. You can add a Canara Bank where I think the worst is priced in. As a disclosure, we've also had a good buy on PFC REC, and I think this relaxation in norms should again bode well for them to not come out with disastrous numbers. So all in all, I would say take a basket of stocks. If you are just trading the bank nifty, it seems to be a good conduit. Try and do a sip in that and buy that every month. Whenever you get a decline also, you'll average out. Or in the meantime, you can chase value where most of the large cap mutual funds and you know, savvy investors are hiding, that is in Kotak Bank or HDFC. However, the caveat is that Kotak Bank is now trading at a market cap of SBI, and that seems very, very far-fetched in the near term.
Yeah, but the kind of gains that Kotak Bank has had over the past few years has been quite interesting as well. Okay, Sanjiv, a pocket, the India Bulls group, you know, we've done pieces after pieces of what India Bulls Ventures does, then they do some fairly interesting things, but the stock price defies gravity a number of times. That India Bulls Real Estate, I'm not including India Bulls Housing Finance here because, I mean, it's a nifty company, well tracked, a lot of people might have investments there. The non-nifty India Bulls group stocks, India Bulls Ventures, India Bulls Real Estate, how closely do you look at them? Do you like any of them?
Yeah, so see, firstly, we have coverage on the housing part, and I think India Bull Housing is now revving up to hit all-time highs. That definitely remains one of the best stocks to buy on decline. You know, if you recall, last month we were telling you HDFC, LIC Housing, India Bull and DHFL. If you have to be in the mortgage space, these four stocks will take the cake. There's no looking back on these four stocks. And now you've come on the real estate side. So I would say there must be some short covering. I don't track the venture stocks so actively now. It's been a huge multi-bagger. But I would say India Bull Real Estate again is proxy to what we are saying, you know, construction, real estate, where the pedigree names are going to be much, much sought after. That's why you've seen the relative outperformance of the likes of Shobha and Godrej and to some extent DLF. I still think that is a very good space to be because it's an India-centric model with you know, large part of the construction and housing activity now looking to gather stream you know, in the second half.
Okay. Sanjiv, Bhasin, it's always a pleasure chatting with you. Thank you so much for getting us an update on the glass half full, the glass half empty, and the risks that get associated as well. But I'm glad you put that into perspective. Really appreciate. Well, Kotak Bank at the market cap or nearing the market cap of State Bank of India. That's an interesting development as well. But the stock has been revving up the last few days for sure. 1.87% higher at 1172. That's doing really well for itself. Hemen, if I can request you to give me two chart checks. One of them is Kotak Bank, but the other one, which is doing very well, is India Bulls Real Estate.
Kotak is following IndusInd Bank in the stratosphere, so to speak, Neeraj. All-time highs, clear outperformer. We had a 7-month consolidation, Neeraj, and funnily, the consolidation takes place when the stock is trending higher. So, lot of relative strength. The breakout level was 1130 odd. All-time highs, we are heading towards 1200 and more. Outlook positive, higher tops, higher bottoms, multi-year uptrend very much on. In terms of India Bull Real Estate disclosure, I have just bought India Bull Real Estate today in the morning from a trading point of view. Having said that, we need a closing above 196 to 216. From a longer term point of view, this stock looks brilliant, but in the short term, we are walking into resistance at 196. So maybe it could take a day or two for this to overcome. But longer term point of view, we've had a 8-9 month correction, Navneet, and I think it's setting the stage for a bigger move. But short term positives also very apparent.
Right. Hemen, your closing strategy on Friday was to buy Bajaj Auto, and the stock's gone up in today's session. It's up almost 1.5%. If somebody would have bought on Friday just towards the closing, is this the level to book their profits?
I'd say only 25%. Frankly speaking, Navneet has formed a rounding bottom. There has been volume support. Mechanical indicators have turned positive. 2860 is what we're looking at, and about 2860, I think it can surprise a bit on the upside. So, I mean, volatile market. So just 25% profit booking. I still feel we have a lot more to go on the upside in Bajaj Auto.
Okay, that's the call on Bajaj Auto. If somebody would have bought towards the closing on Friday, Hemen is suggesting to book only 25% of the profits as he expects the stock to move higher from current levels. Sumeet, the other stock which is doing well on back of earnings today is DCB Bank, and let's not okay, we'll go. I think we've lost the line with Sumeet. I'll come back to you, Hemen. What about DCB Bank? I've seen a lot of open interest build up in terms of, it's also in the futures and options space. We didn't have a gap up opening for this one. It's just building on to the gains, and currently it's almost around the day's high level. At these level, what would you suggest? If somebody would have bought in the morning, should they be booking profits?
Yeah, from a very short term point of view, yes. But if it's a positional play, Navneet, I think we are heading towards 198 and 207. Stock has been consolidating for 8-9 months. If you tell me a 1 year time frame, we are heading towards 250. But short term also, I think there are positives. Maybe partial profit booking, but looks strong. And like you said, open interest built up. It looks smooth.
Okay, Hemen, stay on. So much more to talk about. We'll talk about some individual mid-sized companies as well within the alcohol space. Remember Yatin about 3 or 4 days ago did a story on Dolly Khanna picking up stake in Associated Alcohols and the probable reasons, the pluses and the minuses. But it's a stock that certainly remained in focus ever since Dolly and Rajiv Khanna picked up more than 1% stake in the company. What we thought was to try and get the management and talk about how is business shaping up for them. Joining us is the whole-time director Tushar Bhandari and corporate advisor Mr. V. N. Dubey to talk about what the company is about and what could the numbers look like over the course of the next few weeks, months, years as well. Good having you, gentlemen. Many thanks for joining in. Tushar, let me start off with you. Can you tell us about what Associated Alcohol is? Because as I learn, you are amongst a large liquor manufacturer in central India, but you are a back-end manufacturer for companies like United Spirits and a few others.
Yeah, good afternoon. We've been in this line of business since last 4 decades, and we are always known for our quality of products, that is quality of ENA and quality of manufacturing products as well. So we are major suppliers to USL, Diageo, Pernod and a lot of other companies. And we are also doing job work, that is manufacturing their products in our premises for Madhya Pradesh and other states as well. So we are manufacturing their premium scotches as well, like Black Dog, Black and White, VAT 69, Smirnoff, vodka. And apart from all this, we have also getting into the value-added products. And with the help of the bouquet of all these products, we are able to launch our premium products as well in the market. And we've taken the franchisee business of USL popular brands for Madhya Pradesh on pure risk and reward basis.
So Tushar, sorry, just to get this straight, so do you do contract manufacturing for brands for companies like United Spirits, or have you successfully put out liquor brands by yourself into the market as well?
See, we do contract manufacturing for these Diageo. As I told you, the products which we are doing contract manufacturing for them, we are doing their premium products, that is premium scotches, we are manufacturing. Plus, apart from that, in past 3-4 years, we've also developed our own premium products in the market and we've launched them.
Okay, and in what states have you guys launched these products, and what's the nature of these products, and what's the success ratio been of these products?
See, this is a very nascent stage. We started this process 2 years back. So we've launched it in Madhya Pradesh, we've launched it in Chhattisgarh, we've launched it in Delhi, We've launched it in Karnataka. So within these 2 years, we've launched it in these states. So we are at very nascent stage, but the good point is that we are gaining market share month-on-month basis of these products. And plus, as I told you that we've also taken USL franchisee business, that is manufacturing and selling their popular brands portfolio for Madhya Pradesh. So it has also helped us in capturing the entire Madhya Pradesh market. As soon as we took these products on pure risk and reward basis from Diageo, we became the #1 player in Madhya Pradesh. So with the help of these products, our products are also gaining market share.
If I could ask about your current capacity, what is it, and are you looking to increase your capacity?
See, our current manufacturing capacity is 314 crore bulk liters per annum. We are already in the process of increasing the capacity to 450 crores by June. That'll be commissioned in June. The process is already in place. And we've got a license capacity of around over 9 crore liters. So post the stabilization of 450 crores, we will go in for further expansion to 9 crores bulk liter per annum.
Current capacity utilization is how much?
100% since last 3 years.
Okay, it's 100%. And you're looking to increase the capacity. How do you plan to fund it? And I also wanted to know, what are the number of cases that you guys sell every year, and what sort of average realization do you garner from there?
Yes. Basically, just as far as capacity is concerned, at present we are having, as pointed out, is 31.4 million liters of alcohol production, in which we got the permission to move to 90 million liters. That we are going to take into 2 steps. One, with the existing utilization of existing accessories and utilities, with the nominal capital expenditure in the very short time span, we can reach to from 31 to 45. That steps we have already taken, and from internal sources we are completing in the next few months. Since we were already operating at optimum from last 2-3 years, that is not the issue as far as the capacity is concerned, utilization. Coming to the next level journey would be the journey of 45 to 90. That is, we will be taking up after a year or so upon stabilization of this plant, and then that is going to be the almost same size of distillery adjacent in my existing campus adjacent to that. This is as far as the alcohol production capacity. Coming to your business profile, basically company is having the varied product portfolio, having 3 lines of basically. One is the selling the ENA to across the country to major liquor players, especially USL. We were the pioneer supplier with the Diageo, now the USL.
Right.
And apart from the Pernod and other, and we are rather sole supplier for. Hello.
Now, Mr. Dubey, so that part we got to know. I think Navneet was trying to ask about, I mean, if you are indeed selling your, I mean, as Tushar said, the own brands that you're selling, what's the quantum of cases that you're selling in the last 2 years?
Yes. I'm coming to that brand. As far the branded segment in IIFL is concerned, as Mr. Tushar has pointed out, it is the we were working, although as a job worker, as quality liquor producer, but we have not tried and tested ourselves as per the branded company so far, and then that we have started 2-3 years back, and we were able to get the sizable market share as far as Madhya Pradesh is concerned. But entering in the upper segment was the biggest challenge. To supplement and complement, we have taken the complete franchisee on the risk and reward basis. We have taken the USL popular brands for the Madhya Pradesh. With the help of those brands, overnight we became the serious IIFL player, that is rather the largest player in that segment. So with the help of those brands, now we are trying to consolidate our position in the premium brand in Madhya Pradesh.
Got it.
And apart from, I will be coming to the quantity later. So then again we are trying to capture the CSD supplies and outreach. For that purpose, we are already expanding our horizon. That is a minimum 4 state requirement is there for to have the CSD RB supply. For that purpose, we have already entered in Delhi, entered in Karnataka, Chhattisgarh. Now.
Sure. Mr. Dubey, Mr. Tushar, running slightly short of time, so I'll try to make this a bit of a quick so that we can get as much information as we can. 2 questions, Tushar, to you. If indeed your capacities if you've been operating at full capacity, how is it that your sales have more or less remained stagnant the last 3 years? FY15 was 300 crores, if I'm not wrong. FY17 298 crores, and you've just reached about 247 crores in 9 months of FY18. When does the sales pickup come in?
Sales pickup will come in starting from this year onwards.
FY19?
FY18 onwards itself. So we would be closing somewhere at a decent figure than last year. And apart from that, FY19 onwards, we will add almost around about say 100 crores to the top line from the USL franchisee business, plus our value-added products and other states expansion also.
Okay.
And plus the additional spirit sale, which will start in June onwards, that will also add to our top line. So EBITDA contribution in that also would increase in the spirit sale business, because with the same amount of overheads, we will be able to increase our capacity by 40%.
So what do you envisage your, say, FY21 sales to look like? I believe you mentioned FY18, you will be higher than the 300 crores that you clocked in FY17. What about 2 years, 3 years hence?
See, just to give a ballpark figure, what we are looking at is that we are looking at closing at FY19 by around 450 plus. And then post that, the major boost will come is from the value-added products. And the major boost which will come from 450 plus onwards is the next capacity expansion which will happen. That will be around FY20. So that will be almost doubling our capacity. We'll be moving from 450 to almost 9 crore bulk liters per annum.
Okay. And last question from mine, maybe Navneet has a couple of others. What would be the major segment for you? Would it be manufacturing on contract basis for companies like United Spirits? Would it be selling your own brands, or would it be the franchisee sales that come to you, which you've started very recently, as you said?
See, I'll tell you, it'll be a mix of all the three, because all the three go hand in hand. One is that we are also looking at additional opportunities, like Diageo is looking at reducing the number of manufacturing units. So we are looking at opportunities there as well. We are looking at around about, say, approximately 1 lakh cases of manufacturing capacity increasing for on job work basis. That's what we are looking at. Second is the popular brands category, which we have taken on franchisee basis. The sales and the market share are increasing day by day. This year, we've increased a substantial amount of market share in these popular brands within these 15 days only. So we are seeing a great potential there. Plus, apart from that, we are seeing a great potential in our premium brands as well, because it's got a great acceptance in the market. So we are seeing a boost from that also. But major driving force would be, which will contribute to a greater amount of EBITDA margin, would be from our premium brands or value-added products for that matter.
Okay, before we let you go, just a last question from my end. So far, if I look at the earnings on 9-month basis, they've been looking good. But in the December quarter, I guess the raw material cost was a little bit higher. It was up between 25 to 30%. Is that trend still continuing? What is the company doing to mitigate the cost pressures, if any, if you guys are facing?
No, the pressure is not that much. The increase is not as per around 25%. There's a slight increase definitely there. But we are looking at a great crop this year. And apart from that, company is into multi-grain feed plant. So we have options to move from one grain to another depending on the economics and the market availability of the product. So we are not only dependent on, say, for example, we are not only dependent on maize. We have 5-6 crops which we can look into depending on the availability and the price of the same.
All right, Tushar and Mr. Dubey, we'll leave it at that note. I appreciate both of you joining us today and taking us through what's happening with Associated Alcohol. Remember, that's the company which has been in focus. It's been going up after Dolly Khanna picked up nearly 1% stake last week. It's trading around the mark of 350, and the stocks nearly doubled in the last 1 year. That's the last 12-month chart there on your screen. It's given returns of nearly 190%. Well, it's time for us to head into a short break and countdown. Don't go anywhere. On the other side, we'll get you the Fab 4 stocks of the day at 3:15 p.m. We also tell you what the dealing rooms are recommending in trade and some closing strategies from our technical experts. Stay tuned.
Sorry, I'm late. क्या हुआ?
कुछ नहीं यार. Just working on my expansion plan.
Funding का चक्कर.
It is so frustrating. I feel like banging my head against the wall.
No, don't bang your head. Cross the bridge instead.
Bridge?
हाँ, ये देख. ला.
अरे.
This bridge gets you in touch with interested investors, funding happens, which means more outlets, more customers.
Interesting. And what exactly is this bridge?
A stock exchange created for your kind of company. Just list on it and help your business expand.
Really?
Yeah.
तो फिर लिस्ट कर लूं?
और क्या? शुभ काम में देर किस बात की? चल.
हाँ.
NSE Merge. साथ हमारा, सफलता आपकी. The SME Growth platform from India's largest stock exchange.
Anything and everything about your investments. We're just a touch away. Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
Welcome back. You're still watching Countdown with us on Bloomberg Quint. Well, Nifty is just about the levels of 10,523. We're almost at day's high level. Bank Nifty is up nearly 125 points. Clearly, it's been a great recovery from the opening levels that one had seen in today's trading session. Let me first get you the Fab 4 stocks of the day, and to take us through the same, Yash Upadhyay joins us with the same. Hi Yash, good afternoon.
Good afternoon, Navneet. So we kick things off with Group Finance. The company came out with their fourth quarter earnings over the weekend. Overall, a good set of numbers. Their net profit rose 18% on a year-on-year basis, coming in at about 131 crore rupees, while the asset quality too saw a bit of an improvement, coming in with the gross NPA numbers coming in at about 0.45%, which is an easing of about 30 basis points on a quarter-on-quarter basis. That apart, the company also announced a 1:1 bonus issue, and the street really likes it. The stock had gained as much as 6.5% today. Kirloskar Ferris had a big bulk deal in it, where an HDFC mutual fund bought 17 lakh shares, or about 1.2% equity, and the stock is up 4% or so. Tea maker Andrew Yule is also in focus. It had gained as much as 7% today on the back of reports that the company has sold its premium tea for a record price of 15,750 rupees to online e-commerce company Teabox. And finally, Indiabulls Ventures has been in focus today. It has been gaining for the last two trading sessions, adding almost $100. It's up almost 35% in those 2 days period, and volumes too coming in significantly higher, well over 14 times the 20-day average. Back to you.
Thanks a lot for that, Yash. So those are some interesting stocks to watch out for. Meanwhile, before we move full tilt back to equities, let's talk about one important asset class, which is the Indian rupee. It's had a weak trading day today. The last I saw was 65.45, not 65.41, but still a bit of weakness here. India's trade deficit numbers not the best. Though inflation has come off a little bit as well. But let's talk about all of this in further detail with K. Hari. He's a treasurer and head of global markets at First Strand Bank, joins us on the show. Hari, good having you. Thanks so much for joining in. Good afternoon, Neeraj here. This weakness that has come in, I doubt that this is happening as a result of a global trend that the dollar is showing vis-a-vis emerging market currencies. How vulnerable or how weak is the Indian rupee looking in the extreme short term?
Good afternoon, Neeraj. I think, this is something that's been happening over the last 3 months. So I think it all began with the fact that the FPIs this year have become very shy as far as the Indian markets are concerned, both debt and equity. And as against about 1,70,000 crores of net inflow that came in last year, this year we've seen almost flat inflows from them. I think that is the biggest negative that's been impacting the rupee. And of course, the fact that there are hostilities of at least a small sort breaking out over Syria which even before the oil, oil had been bubbling, but with this, with Brent above $70, this is obviously going to cause pain for the trade deficit. And the TF trade deficit has actually gone up beyond that $10-12 billion to the $13 to $16 billion level, which is going to hurt because we've now closed the year ending March 18, and we've seen a clean spurt of about $50-odd billion in the annual trade deficit. So some of this is going to remain with us because oil is going to go up and stay there. But we can still manage it. But what's temporarily kind of put the pressure on the rupee is clearly the fact that there is trouble on the oil front and there is trouble on the geopolitical front. And therefore, until that backs off, you'll see the rupee coming under pressure. Also, corporates will be not covering at all over the last many months. They've been trying to now cover their at least short-term exposures. And that's also led to a little bit of rupee weakness. Having said that, I think the current account deficit, even at the current high level, is still at the 2% level and below, and therefore is still manageable so long as the country economics are working. Therefore, I still expect that the rupee the fall will be capped at that 65, 70, 66 level, even if, oil goes up a little bit and exporters have consistently been selling at those higher levels. So I still expect that exporters will take advantage of the high premiums of the far end and would look to sell, and that should cap any rupee fall.
Mr. Harrier, keeping in mind all the local and the global factors that you just highlighted for Indian rupee, just want to check from a longer term perspective, let's say for the year, what sort of levels would you be monitoring on rupee?
I think the rupee is, if the FPIs remain shy as they have been in the last 3 months, then I think this year will be different from last year. Last year, the rupee was very much in a range. And in the early part of the year, if anything, the rupee was beginning to strengthen, a point that was pointed out by the U.S. authorities, which led to sterilization. So this year, the trade deficit is going to be at a slightly elevated level, and FPIs are not going to come. It's inevitable the rupee will start showing weakness. So it'll constantly keep checking that 65, 50 to 66 levels. And technically, if the shyness continues on the FPI front, it could breach that and go to somewhere in the 66, 66, 50 levels. But having said that, one has to also look at the fact that the FPI shyness has also been driven by the fact that we had interest rates going up, and that led to mark-to-market losses on the FPI portfolio. So if the inflation numbers, which are now cooling down, both on WPI and CPI, if they remain steady, then you could see the carry trade emerging again, and that could again give some relief for the rupee. So we'll have to watch what happens on the interest rate front on the Indian side, and the graph of how the Fed hikes are going to pan out. So if it's going to be towards the latter part of the year, I think we could still see some respite for the rupee in the shorter term. But on a more fundamental basis, I think the rupee will have to get weaker, and probably it will be in the good for exporters because they've been looking for some leg up, and a weakness which is not manipulated but which is actually happening because the fundamentals would actually come in good stead for exporters.
Okay, Mr. Harrier, we'll leave it at that note. Appreciate you joining us and taking us through the levels that one can monitor on the Indian rupee, which has hit 5-month lows today. Well, moving on, cement companies have had a tough 2018 with prices remaining largely flat despite it being a busy season for the construction sector as a whole. But analysts don't seem to be perturbed right now. In fact, the worst performing stock has the highest growth potential if analyst targets are anything to go by. Niti Mirchandani is here to fill in with more details on that. Niti, over to you.
Thank you, Navneet. Well, the going has not been good for cement companies so far in 2018, but then reeling the most under pressure is India Cement, which has slumped as much as 19% on year-to-date basis, which is also as compared to its rival like Orient Cement, which has lost a good 14%, as you can see in this chart here. This also compares to the other pan-India players' performance, something in the like of ACC, Ambuja and Ultratech, which have lost so far in this calendar year in the range of around 8 to 11%. The only counter which has actually managed to hold the head above the water is Ramco Cement, which has actually gained so far on YTD basis by fetching a return of good 6%. However, shifting back the focus to India Cement, not necessarily that the worst performing cement stock in 2018, it is also the one which promises the highest return potential. Well, 14 out of 23 analysts which track this counter counter and have a buy rating on this counter suggests a potential upside of nearly 30%, more than 30% for this counter, which is only second to the return potential seen by Ultratech Cement and almost highest as compared to rest of its peers. Also talking a bit about its valuation, the stock is currently trading at its 1 year forward EV to EBITDA of nearly 7 times, which is at a significant discount as compared to rest of its peers and the industry standards of nearly 12 times. Back to you.
Thanks for that, Nikki. So do watch out. That's an interesting one. Dharmesh, Kant, independent market expert, joins us on the show. Of course, Hemen and Sumeet are still with us and we'll talk to them about this one too. But Dharmesh, just a quick thought. India Cements, the cement pack, while may have done whatever it has, this one consistently remains a cheap, large cement player. It just doesn't become expensive.
Yeah, good afternoon. See, India Cement has its own set of problems. Much of it has now gone by, but still I do think that the exposure primarily to the South India is a matter of concern. Cement as a pack has seen a good correction. I mean, all the stocks, be it top line, mid cap, they have seen a healthy correction happening into the stock prices. And the primary reason has been because of, you know, the pass on of the input cost, which has gone up, and they have not been able to take the blended realization up to the extent the input prices have gone up. But at the same time, that has been offset by the volume of take which has been happening. I do think the cement will see a traction on a pan-India basis. As of now, East India is seeing the best amount of volume of traction in the cement space. But going forward, as you know, we march into the election year and the spending increases. Already we have seen the traction in the order inflows which have been awarded to various construction companies. So, and road construction primarily is now cement driven. So, all this will go a good way into the volume of take. The worry is the input prices on the petcoke front, because since the crude oil prices is going up, so that has become expensive and that will be eating into the margins. Overall, I do think you know, select cement stocks as a whole does have a potential of 30 to 35% upside from the current levels where they have been, you know, trading at. So a good time to accumulate stocks like Ambuja Cement, Ultratech, Sri Cement and Aramco. These are my top picks in the space, and I have been advising clients to accumulate on this correction, all the cement pack.
Okay. Sumeet, Bagadia, any thoughts on the cement large caps before I ask Hemen about ACC? But Ambujas of the world have done well too. Any thoughts here, Sumeet?
See, most of the cement stocks are looking good to me. ACC, Ambuja, Ultratech, Grasim, all these stocks are doing well. I think from here on there is a possibility that we might see a good upside move in next couple of weeks. Immediately looking at the chart, it seems that this is just the start of the new rally, in which from here on there is a possibility that we might see a move around 15 to 20%. If we talk of ACC, it has been consolidating in the range somewhere around 1510, 1514 on lower side to 1580, 1600 on higher side. This time it seems that the stock is the way stock has given a move. This time it seems that the stock will break levels of 1600 on higher side, and from here on there is a possibility that we might see a move till 1700, 1710 levels, which is immediately a 200 DMA for this stock. And overall we are expecting stock to move up till 1800 levels. For a trading perspective as well as for an investment perspective, one can initiate long positions in most of the cement stocks. At present, ACC looks good to me.
Hemen and recommended ACC. Hemen, any thoughts here on ACC or some of the others that you recommended, Hemen, earlier? I think Bajaj Auto was a BTST on Friday.
Yes, I think, in fact, frankly speaking, Neeraj, ACC still has headroom. We are breaking out. Bajaj Auto has had a pretty sharp run-up. One gets the feeling 2860 is where we could see some resistance, but Neeraj, some more headroom left. Volume is higher. Looks good. Further upside, probably on the cards.
Okay, Niti, I'm sure these guys don't trade so violently they enter into bans, but what is the F&O ban list looking like?
Well, there's two stocks to keep an eye on. One of them is Reliance Communication, which is very close to entering into the F&O ban for tomorrow's trading session. If you look at the overall open interest as a percentage of market-wide position limit as on Friday was 91%. For the stock to enter into the F&O ban, it has to breach the 95% mark. And today, Reliance Communication futures as well as a couple of option strikes have seen open interest build up. So watch out for this one. What may come out of the F&O ban is Balrampur Chini, as it's very close to breaching the 80% mark on the downside. side. On Friday, it was nearly 82%, and we've seen some unwinding for a couple of the option strikes. If it is able to breach the 80% mark, we'll probably see Balrampur Chini coming out of the F&O band for tomorrow's session.
Let's wait and watch. Thanks a lot for that, Navneet. Now, let's try and get you a sense of what dealing rooms are recommending in the session today. I don't know if they would be recommending stocks like Midhani or Arman Financial or GNA Axles or no, because these stocks are doing really, really well for themselves in the session today. But just look at those clutch of the specialty chemical companies, Sudarshan, Aarti, SRF, some big moves out there. Dharmesh, do you like this specialty chemical space? The stocks, after maybe a small lull in the previous 6 months, are now starting to make a meaningful move.
Yeah, definitely. I think this is a space which will hold traction going forward because the underlying economy is recovering. So let's not deny the fact that there has not been a momentum in the underlying economy. So that has been recovering, and specialty chemicals are the space to be in. There are two factors. One is the economic growth which is happening. The second factor is because most of these companies was having a big competition for China, so which is practically not there as of now. And in fact, they have been gaining traction worldwide, let alone our country. They are able to sell their products overseas as well. So among the space, I think SRF looks the best bet to me in this specialty chemical space because others have risen too high. So valuation comfort is not there. At the same time, capacity headroom, if you look at other specialty chemical companies, is not there. That elbow room is not there. So I would stick to SRF in this space. But the space as a whole does look attractive to me.
Okay, that's the view coming in on the chemical space. Just want to pull up DB Realty before we get to the dealing room check. It's surged nearly 16% in trade as we speak, 15.5%. The move has just come in the last 5 to 10 minutes of trade. We'll get some views going on that, but it's 3:15, so let's take a look as to what the dealing rooms are recommending. Yatin Mota and Darshan Mehta are here with their channel checks. Good afternoon to both of you. Darshan.
Yeah, so some of the stocks have been spoken, and as Neeraj was mentioning, GNA, Axle, Midhani, all these counters have been definitely spoken about. But one of the stocks that's been actively spoken about is Kotak Mahindra Bank, trading at record highs. Dealers do anticipate that the momentum will continue. It's overtaken SBI to become the second most valuable bank in India, according to market cap. So definitely the momentum is here to stay, according to dealing rooms. The next stock that dealers are talking about is the Federal Bank. Now, if you saw that dealing room, if you saw what dealing rooms are talking about, is that DCB came out with a rather strong set of numbers. It's up almost 7%, and there is a high anticipation that Federal Bank too will report strong set of numbers. So on that back, Federal Bank has been spoken about. And over the past few days, Oracle Finance has been seeing a lot of traction. We spoke about Oracle Finance over the past few days, that there is heavy HNI accumulation that is happening on the buzz of a potential corporate announcement. That still remains, moving higher on decent volumes. So Oracle is something that's been actively spoken about. But Yatin, what are you hearing?
Well, Arvind Limited, and last week also we were talking about this counter doing well in trade, almost 4% up for that one. Dealers are indicating a buy as far as the stock is concerned. Apart from that, do watch out for Escorts. That is also one stock in the auto space which has been doing extremely well, almost 10% up in the last 5-7 trading sessions. So Escorts is another stock wherein dealers are recommending a BT-ST kind of a strategy. And finally, the cash market segment, watch out for IIFL Chemicals. Dealers are expecting a 10 to 15% upside as far as this stock is concerned in the mid-cap space.
Well, thanks a lot, Darshan as well as Yatin, for bringing that dealing room check for us. Well, we were highlighting DB Realty before we did the check on the dealing room side. Anything on the charts, Hemen? 16% higher. Do you think there can be a further up move?
Well, it seems to have given an upward breakout from a inverted head and shoulder pattern. The neckline was at 62. I'm not sure if one should do follow buying after such a tremendous move, but if you have a position, I think distinct further upside, we are probably heading towards 69 and 74, Navneet.
Okay, 69 and 74 is the near-term target, which is being highlighted by Hemen on the charts for DB Realty, which has surged 15% in the last few sessions. Dharmesh, I'm going to come to you on Escorts. This is a counter which has been trading around its lifetime high levels now. Do you think the reward could be higher than the risk even at current levels?
Not likely. I think the risk factor is too high. So, to chase the momentum which Scotts is seeing as of now. The numbers have been excellent for last couple of years. The company has seen a turnaround, and all those fundamentals are intact, where there is no deterioration out there. But at the same time, the way the stock prices moved up, I think on the valuation metrics, it looks way too high, expensive. But as the momentum goes, it can continue to climb higher highs. So fundamentally, I won't be recommending I mean the clients or the participants to accumulate this stock from here on. Technically, they may still continue to trade. I think M&M is a much better bet in the space as of now. Valuation comfort is there. The attractions are coming back into all its segments, particularly the farm equipment segment has been doing well. MSCV segment, CV segment has been doing well. Only the PV segment has not been performing the way it was performing a couple of years back. But I think with new launches coming into play, it will again, and the economic improvement happening, it will again continue to gain traction. So between the two, I think fundamentally Mahindra & Mahindra looks a better bet to me.
Okay, M&M looks a better bet than Scotts at these levels, which has been trading around the lifetime high mark. It's 3:20. Time to get in some closing strategies from our technical experts. Sumeet, I'll come to you. Any BTST or STBT for tomorrow's trade?
Well, the way markets are moving up, we have found out a BTST trade, and on BTC side, Nosal is looking good to me. It's a cash market stock. One can initiate long position in Nosal at the current market price, that is 222 to 223 levels. With the stop loss to be placed at 215 levels on lower side. And on higher side, there is a possibility that in next couple of days we can see move till 235 to 40 levels. So for a trading perspective, one can initiate long positions with the stop loss to be placed at 215 for the targets of 235.
Okay, that's a buy call coming in on Nosal from Sumeet. Hemen, what about you? Would you continue with Bajaj Auto or you have a different call?
No, Bajaj Auto ACC remain good, but for a BTST, I have a feeling UPL looks interesting, Navneet. I would have a BTST on UPL.
Okay, that's a BTST on UPL, a counter which is actually searched in today's session. It's trading with gains of almost 2%. Just want to get a check on Cipla as well, which is the top gainer. Hemen, on the charts at 586, can there be more move on the upside?
It's given a breakout at 578, Navneet, but I'd be comfortable buying closer to 578.
Okay, that's Cipla for you, top gainer on Nifty, and the top loser is Tata Motors. Sumeet, on the charts 338, this was the stock which was gaining until few weeks back. Where is the support coming for Tata Motors?
Yes, you are absolutely right. Couple of days back we had seen a good move in the counter, but now immediately it is given a breakdown, and from present levels there is a possibility that we might see some more downside till the levels of 330, 320 levels. Overall, the supports are placed at around 320 levels. So till the time these levels are not taken away, it's better to avoid fresh short positions at the current market price. In fact, one should look for buying opportunity at lower levels. 330, 332 are 330, 335 are decent levels to initiate long positions. At the same time, on higher side, stock has resistance at around 350 levels. Once the stock is able to give breakout above 350 levels on closing basis, then there is a possibility that we might see extended move to 370, 380 levels. So immediately the range for the stock is placed between 320 levels on lower side to 350 on higher side. Either side breakout will give a good move in the stock. Overall, we are expecting stock to give upside breakout.
Okay. Looking at Arman Financial Services, that stock has gained quite a bit. There is strength in Gujarat Ambuja Exports. That stock is trading about 7% higher, so doing well. And GNA Axle, amongst other stocks, is up about 4.5%, so doing well for itself too. Dharmesh, this pack of GNA Axle, Ramkrishna Forgings, Bharat Forge, this CV supplying auto ancillary names, is there merit in owning any of them? Because if anything, the CV cycle seems to be alive and kicking.
Yeah, definitely there's a merit there, and they have been, doing fairly well. All the businesses front, everything has been picking up, and auto numbers are also, again, advocate the same. So I do think, to my mind, I think Bharat Forge stands the best bet out there. among all the auto ancillary packs, because somewhere or other, be it Ramkrishna Projing or Motherson Suni, there has been some issues or other. Bharat Forge now seems to be getting its act right on all the fronts, and Class A trucks has also picked up in US in a big way, and they have a company out there. So in case there is a protection kind of environment or some regulation coming out of the US, Bharat Forge largely stands insulated from any such policy decisions which US may take going forward. That's the worry surrounding the entire trade scenario in the globe. So to my mind, the numbers should be extremely good for Bharat Forge, around 25% kind of a PAT growth I'm expecting in Q4 for FY18. And valuation wise, still the comfort is there, so that should be acclimated at current levels, around 30-35% kind of an up move one should see over a period of year in the stock price of Bharat Forge.
Okay, Bharat Forge is what Dharmesh likes, but what's inching higher in today's trade? Pull up Arvind, that's almost trading at day's high. On YTD basis, obviously this is the counter which is underperformed, but just the gains have been building up. Hemen on the charts at 425. Is there any fresh breakout on the upside?
Frankly speaking, it gave a breakout at 415 Navneet. Open interest built up, looks good, but the previous high was on 1st March at 427.80. Navneet, we've come to that level, so I am not sure if it is in your favor to go long without a correction, because earlier high we will see resistance coming in. So I'd be comfortable buying it at 420. I'm not sure if I'd buy it at this level.
Okay, so not buying at these levels. Sumeet, any call on Diwan Housing? A lot of these NBFCs have inched high. Even Ujjivan Financial is up and about. Given a choice, which one would you go for?
See, DHFL is looking good to me. We had given a buy call in DHFL at levels of around 520. Now looking at the chart, it seems that the stock is headed higher. From here on, there is a possibility that we might see move till 580, 585 levels. 585 would be the immediate target for this stock. Once the stock is able to break 585 on closing basis, we will see extended move till 630, 640 levels. That means from here on, we are expecting a move of around 80 to 100 points in the next couple of months. I think DHFL is a very good bet at current market price. Those who have taken long positions at lower levels, they can hold on the existing long positions with the trailing stop loss to be placed at around 545 levels. And if anyone wants to initiate a fresh positions at current market price, then they can go ahead and initiate the long positions for the immediate upside till 585 levels. Once the stock is able to break 585 on closing basis, then we will see extended move till 630, 640 levels in next couple of months. So overall, is a buy on DHFL, Diwan Housing Finance Limited.
Some stocks which have just jumped up in the last few minutes of trade. DB Realty, the intraday, looks very interesting. Aditya Birla Fashion has moved up. Symphony has moved up. So 3 or 4 names on which there have been spikes in the last few minutes of trade. So good going for those names. And BF Utilities seems to have just done a little bit in the last few minutes of trade. So good going there. Dharmesh, take a moment to thank you, of course, for joining me today and giving us your thoughts. Really appreciate your time with us today.
Thank you.
And one final thought on these 2 or 3 names, AB Fashion or a Mahindra CIE or a Symphony.
ABFRL needs a close above 153. Mahindra CIE Neeraj is still range bound. Nothing much. I think ABFRL looks relatively better.
Okay, that's the technical view on a couple of these stocks which have just inched higher in the last few minutes of trade. But let's head across to Neeraj to find out how exactly today's closing is panning out. And Neeraj, what a recovery we've seen from the opening levels, and we're almost closing a day's high, which is a positive sign.
And higher than the levels that we were speaking about when we started the show as well, Navneet, probably. At least, yeah, you're right, at least ending close to the day's highs, which is good going. I don't know if the mid caps and the small caps are following suit or no, but the BSE mid cap and the BSE small cap indices or the Nifty small cap index will also come up on your screen. 0.5% for the mid caps. Actually, it's yet another day of outperformance because even in Friday's session, they've done really well. And up about 0.5% for the small cap space in today's session too, which would mean that the market breadth will be looking fairly positive today. Okay, so what's moved and what's not? Kotak Bank, principal gainer, up about 2%. HDFC and HDFC Bank giving company. And look at this cluster of auto names. So Hero MotoCorp, Bajaj Auto, Mahindra and Mahindra, Maruti out here about 1% higher. There's a strong move by rate sensitives in the session today. Peppered the Sensex with rate sensitive names which have done well. Save for Tata Motors and Tata Motors DVR. Again, 5% down. I don't know if it regards to job cuts at JLR or some other factors, but Both the Tamo twins are down, and Infosys, which looked like starting off maybe 5 or 6% lower, ending the day just about 3%. So it's actually not turned out to be that bad in the afternoon for Infosys. Otherwise, it's been a ho-hum kind of a session for some of the others. But clutch of mid-caps, as always, active. More so of need today because it was a day of recovery for the mid-caps as well.
That's right, Neeraj. In fact, the India Bulls Group stocks were quite active in today's trade. So India Bulls Venture, let me just pull up that. That was locked in upper circuit in today's session with gains of nearly 20%, as you can see the intraday chart there. India Bulls Real Estate was the top gainer among the Nifty Realty stocks. That also saw gains of between 6 to 7% in today's session. And DB Realty, we highlighted, the stock went up in the last half an hour of 45 minutes of trade. There was a sharp jump seen there, and that's also closing the day with gains of between 13 to 14%. A couple of results reaction. DCB Bank, remember this is the one, the numbers were good, but it didn't have a gap up opening. It was building on to its gains throughout the session, and finally it did close little bit off day's high, but good amount of long positions was seen for this counter. Growth Finance was the other one where we also spoke to the management. They highlighted for FY19 they expect the loan growth to be somewhere between in that range of 18 to 19%. NBFCs like Dewan Housing, Ujjivan Financial, both of them saw significant gains. They're also in the futures and options market, so some bit of long positions were created for these counters. Escorts, that's the one that we've been chatting with all our market experts. It's been touching its fresh highs every day. Friday it was up 4.5%. Today also it closed almost at day's high. On the losing side, Rane Break did not do well. Reason being the numbers were not that great. On the operating front, we did see some bit of contraction in terms of EBITDA margins. The other one which was in news was UCO Bank. That also tumbled in today's session. Your biggest F&O loser for the day was Reliance Communication.
Yeah, so all in all, bring up one, the market breadth on the screen, then of course the contributors list, and then the turnover as well. This is the advanced decline ratio. The number of declines stayed higher, but I think we did come off a bit from the lows sometime during the last 45 minutes to 1 hour of trade. The contributors list probably will show you Infosys at the negative end and Tata Motors right here, but the HDFC Twins and Kotak Bank, what a big move for Kotak Bank, Navneet. I don't know if the F&O cues indicated very strong build-up over the last 2-3 odd weeks. The price movement has been staggering for Kotak Bank.
That's right. In fact, it's been inching higher every day. We've not seen Kotak banks succumbing to selling pressure that, on and off we've been seeing for markets. And definitely on the future side, not major build-up, but there were some long positions being created here.
Okay, so, well, that's the story here. And then the turnover will come up on your screen as well. Well, subpar, I would guess, on all counts. F&O may be just about hitting the right
average,
note.
5 lakh crore.
Yeah, but so all in all, it's a day which is, well, fairly lackluster, but for the fact that we are not ending at the levels which we started off with.
I think that's a major takeaway, and that's what we were discussing, because Infy was supposed to be a big drag considering it's a heavy weight with 5% weightage on Nifty, and that recovered a lot, and that contributed only 20 points, I guess, on the downside. And with that, I guess stocks like TCS and HCL Technologies, they recovered. I think that also contributed a lot alongside your pharma pack.
Well, interesting. Okay, final thoughts from our experts. In moments from now, of course, we'll have the monsoon forecast and the press conferences there as well. But before that, final thoughts from our experts. Sumeet, what's the best index to trade currently?
See, I think if we talk about indices, I think immediately index specific Nifty is looking very good to me, because from here on we will see a very good upside move. I am expecting, see, today's closing is seen about 10,500 levels, which is a very positive sign for the index, and from here on we are expecting a move of around 500 points very soon, probably in next 1 or 2 months. I think immediately the index is headed for 10,700 levels, and then from here on we will see a move till 11,000 levels. So overall, those who wants to initiate a long position in Nifty, then that should be on buy side, and one can initiate long positions at current levels also. If there is a dip of around 40 to 50 points from present levels, then that should be used as a buying opportunity. At the same time, with the move in Nifty, we will see a move in Bank Nifty as well as private banking space also. So most of the private banking space are looking good to me. I think one should be on long side in most of the private banking space.
Okay, that's a bullish view coming in on the private banking space. Hemen, your closing thoughts?
I pleasantly surprised, no need correction wasn't expected to be very deep, but I think amazing recovery. I think that augurs well. I think 10,550, 10,625 and 10,720. We are heading towards it, and I think it's just how it happens. But yeah, it's shown a lot of resilience today, so I would be clearly positive.
Okay. Hemen, are you inclined to play this move more via options than futures now, after this heady move that we already seen?
I think one can do an options ladder, 10-3, 10-2, 10-1, 10, sell everything next month because there's more premium. We don't need to ride the whole month till the end of the expiry. But I think the way it is and the open interest has built up, I think so. I'd say 10-3, 10-2, 10-1, just sell next month puts.
And that's 10,200.
Yeah.
Okay, Hemen as well as Sumeet, thanks a lot for joining us today and taking us through your technical views on the markets. Well, with that, it's a wrap in this edition of Countdown. We're also watching out for the Indian Met Department's first monsoon forecast for the current year. The press conference is expected to start shortly, so stay tuned for that.